Hey traders, welcome to our weekly Sunday. We call it the Raghee Report. Great to see everybody. Hope you've had a good weekend. Hope it's been a relaxing one. Hope you spent a little bit of time away from the charts, but it's Sunday evening. It's time to take a look at the way in which these markets are opening as we begin the month of October. Lots of significant levels were broken towards the end of September, going into end of quarter and end of month, not the least of which was the June, you can see right here, June 17 low, June 16, June 17 low. We pierced it a number of times, but take a look. We have a Darvis level there as well. Take a look. We finally closed through that level. Pierces are one thing. That means intraday, we were able to get up and down through that level, but that closing sentiment is far more important. And you'll see there, we finally closed below that level on Friday. Something else that was really interesting was on the weekly time frame, and this is the S&P 500 we're looking at. On the weekly time frame, we've pierced the 200 before. We pierced it, but again, much like the daily, piercing a level is not the same as breaking it. And you'll notice that we have now closed below. That's that sliver of a chart there on the right side. We have finally closed below that 200. I'm using the propulsion, the simpler propulsion, where those dots are a combination of a couple factors, the most important of which is the 8 exponential moving average has remained crossed with the 200, breaking that level. Here is where we sit. So ultimately, two really important levels broken on the S&P 500. The S&P 500 on the daily had broken down into a downtrend on the 26th of September. So any of the chop that we saw through the middle of July, a little bit of an uptrend through the middle of August, and back to chop through August and September. By the end of September, the 8, 13, 21, and 34 had regained that bearish, that downward angle. And, not the least of which was the CPI and Jackson Hole and FOMC, right? The culmination of which certainly, I think, was too much for buyers to really continue to step up and support. We'll need another reason. I think we're going to hear a lot about Fed pivot. We're going to hear about, other data-driven reasons for the Federal Reserve to tap the brakes. But until that happens, gang, the bears are in control. One thing I really want to make super clear, and this is something we talked about in summer when I did my day trading class with you all. I know many of you took that. We formally introduced a tool that actually has been a part of the simpler verse for some time, and that's the HPMRs, the hourly price movement ranges. We finally expanded on those packs and released those. And that just gave us a way to use time and volatility in a much more effective way, in a way that allows us to, I forgot to do here? Turn on my handy dandy light. Oh, there we go. Let there be light. Let's see. I got that light. Oh, that's not so good. No. There we go. All right. So what that hourly price movement range allowed us to do is use simple indicators like a slow stochastic along with the HPMRs, or my V-score along with the HPMRs, use time, use volatility, get in, get out, and oftentimes be done before 11:30 a.m. Eastern. In that way, we're trading the volatility of the open. We're not committed to the uncertainty of the midday, and we're not even really engaging the market into the close, which I have found for the largest number of market participants, the close is far more difficult to trade than the open. And so why not trade during the easier part? In fact, there's an old saying, amateurs open the market, professionals close it. So if we're going to go toe-to-toe with any type of market participant, why not let it be the amateurs? And that's what we've been focusing on, those small windows of short-term time frames. And in this way, the confusion of the longer-term macro And, let's face it, what's the macro right now? It's one thing. What is the Federal Reserve going to do? So with that being said, gang, that's where we sit. I'm still going to continue to focus on short-term time frames because, frankly, I do not have the structure for an edge. I do not want to short in the hole, as it's known, meaning shorting from lows, especially new lows. It's actually easier to buy new highs than it is to short new lows. I don't want to short new lows. However, now that we have the red trend, the downtrend, we can start to consider short the rip. All right. So that's where we sit. Let's go ahead and get to the best part of our show, and that is your questions. Okay. All right, gang. Happy Sunday. How are you, my friend? Absolutely. Thank you. Thank you. All right. Ronaldo says, just completed reading my third book, Forex on 5 hours a week. Ah, yes. That was where I introduced the concepts of these historical volatility levels. Very cool. And it did not disappoint. I'll tell you what, Ronaldo, thank you so much for saying that. I look back on those books, and it's really a twofold. On one hand, I look at those and think, gosh, I was such a young trader. And those books are written, gosh, 10 to 13 years ago. I'm trying to remember what date, when that one was printed, Forex on 5. I'm trying to remember when we printed that one, 07, 010, or 2010. Anyway, I look back and think, oh my gosh, I was such a young trader, and I was. And on the other hand, I think 2010. All right, Lorna Bot says 2010, so 12 years ago. And then I also thought, then I think to myself, thank goodness I don't recognize that trader anymore. Really, she used the same tools, but gosh, 12 years later, what a different perspective I have. And I was just thinking to myself, I tweeted this not too long ago. I don't know if it's going to show up here or not. And it's so true. Where is it? Let's see. It's such a cool concept. This was a TED Talk. It was a 6 or 7 minute TED Talk. If you have a chance to check it out, Dan Gilbert. And the essence is this: we're all going to change, right? We are. It's inevitable as traders, as humans, as whatever. So why not change into someone we want to be, right? Why is this difficult? Because remembering is easier than imagining. Now, luckily, I imagined myself really clearly in terms of what kind of trader I wanted to be, what kind of time I wanted to commit to the markets, which markets I wanted to trade, which time frames I wanted to trade, which indicators, and there were indicators I created. I had a very clear image of what it is I wanted to do, in the future. I had a really good, clear concept of my future self as a trader. Not in every realm, right? There are other realms where I fell short. What is my future self? From a health perspective, what is my future self from, whether that be a daughter, sister, wife, whatever it may be. So other places I did okay, but I put most of my emphasis in trading. And funny enough, fast forward 12 years, it's incredible when you look back and thought, oh gosh, that's where I was. Check that out, gang, because if there's anything that I find happens to traders again and again, is they do not have a really clear picture of the type of trader they want to be. And it's general. I want to be profitable. That's not enough, gang. It's really not enough. What kind of trader do you want to be? And if you've never watched that Dan Gilbert, check it out. It was really, really, really good. The things that we value now, the person that we think now is who we think we're always going to be. When in fact, if you look back on your trading or your life in any 5-year chunk of time, you're remarkably different. And sometimes on purpose, and sometimes it just sort of happens, right? So I think back to that book and thought, gosh, I was the best version of myself when I wrote that book. Thankfully, that's not as good as I was able to get. And I think even further along in 5 years, 10 years, what am I going to look back on and be? So thank you for that, Ronaldo. Glad you have found our show and glad to have you here on the channel. Hey there, Mark. I'm looking at my 4-hour chart in the spot Forex market with Alonda. Cool. The euro dollar pair is double range bound. Euro is an interesting look at the dollar. One of the videos that I did last week was to look at the US dollar, because it's a very popular thing, very popular symbol to look at. It's sometimes a little frustrating because the US dollar index for futures traders is on the Intercontinental Exchange, and most traders do not have access to it. So they'll end up looking at DXY or UUP. But one of the most effective ways to understand what's going to happen with the dollar is number one, the euro, number two, the yen, and number three, the pound, because those three currencies in that order are the primary weighting within the dollar basket. And dollar long, euro short continues to work. And we're going to look to get back into that trade. Now, there's a number of ways to do it. Euro US, I know not a lot of Forex traders out there, although it's a market that I love. 6E, choose your own adventure. This is the Euro US futures edition, right? Then there's also the M6E, futures micro on the euro. And then there's also the FXE, which is the currency share ETF of the euro. Lots of different ways. Choose your own adventure. Same conversation. What is the euro doing versus the US dollar? And that's the primary relationship that the dollar has when we take a look at the dollar basket, right? All right. I am Groot, Archer, Daniel Midland, and Marathon, looking at going long. Interesting. 200 propulsion, which is the 200 exponential moving average. Again, there's a couple criteria, the main one of which is that the 8 has, in this case, crossed up through the 200 exponential. The dots plot. Now they're more visible, more steady, stable, reliable support. If we can get a minor low in this area, that would be actually very, very good. If we have an oversold stochastic in this area, that would also be really, really helpful. Let's go take a look at this via a slow stow. Yeah, it's oversold, but it has been, in fairness, since mid-September. That minor low at the 200 would probably be very, very important for us here. All right, looking at Marathon. Marathon is a little bit different. And let me show you all something. Let me grab my drawing tools here. Okay, Marathon is kind of a neat, it's already happened, but it's something at least you can study. And oversold stochastic, minor low. Now, if I could be really fussy, this pattern would have happened down at that level. That would be perfect. If I'm going to be really fussy, what would be the ideal scenario for that setup? That would be it. Great pattern, oversold stochastic, already triggered. So nothing for me to do here yet, maybe upon a gap close, but keep an eye on ADM. That one's an interesting one. I am Groot. Yeah, it's an interesting one. All right. Next up is TXN. All right. Going long. Ooh. So Jack, I'm not saying we can't go long here. Hear me out. I'm definitely not saying that. However, let's pull it up here with some volume levels. And here's my issue with TXN. We've got our first red trend indication. 8, 13, 21, 34 now indicating we have a very, very, very fresh downtrend. Now, this is not set until I have a second session with that same red trend. Okay, so there's a maybe on Monday. The next thing I'm going to look at is volume. We have a volume ledge of support right there. And what that means, you see how the volume is just protruding a little bit, jutting out from the right there, a little bit of volume. If we can hold that level and put in a minor low, as we close in, we'll take a look here. This is kind of interesting too. Now we're starting to decode the market. It's fall, gang. Not that we can't look at volume in months that aren't fall, but take a look. We've taken out the -1 standard deviation. The next level down is going to be the -2. If we can get a -2 standard deviation, that would be support. If we can get a minor low pattern near this volume ledge, that would be an ideal scenario where both volume and a price pattern are setting up a long position. So those are things to look at. One of the best ways to decode any type of behavior in the market, gang, is with volume, because volume means size, it means attention, it means that that level is one that has already gotten a lot of attention and flow, right? And so that is why, if we can take volume, not supplant, but supplement that to price levels, supplement my Darvis levels, supplement an oversold stochastic, things like that with volume, now you're working more than just one factor in the market, which is price. Now you're working two. And that's where things get really exciting. All right, next up is Jack asked, would I review my V-score on the weekly for the indices? Sure. So let's do this. And so here's my weekly chart and the indices. Now I'm going to do the futures contracts because that's what I would do if this was something that I was looking at. I also want to know where I've anchored this. That's not what I want for an anchor. Okay. It's really important. So take a look here, gang. It is really important if we're looking for support, or if you're looking for support to be broken. The mean is in play, gang. And you might say, but Rob, what about this? Gang, that was the pandemic sell-off. Okay. So short of that, support, 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 support. Do we think the mean, or that area right around the mean, is a big deal? It is. It is. Now, for those of you wondering, Rob, in terms of the importance of this kind of analysis, what did this show us in 2020? All right, so let's go back, and I'll show you what this looked like in 2020. All right, so this is that same 3-year look back. Now I can even do a 2-year look back. I'll toggle between going back 1 and 2 years, and it depends on the volatility of each year and other reasons that I would anchor to a certain year back. What happened during that year? What type of volatility do we see? What kind of highs and lows do we see? What kind of volume spikes? So there's a lot of reasons we anchor a VWAP and therefore also the V score. But it's usually a pretty process driven. It's just a series of questions you ask yourself. What kind of dips happen in that year? Do I want to accentuate that within the study? Anyway, 2 or 3 year, you do both. And what pops out? Take a look. This area just below the -2. All right, that was, and then here comes, what sell-off was this? That was the Powell hiked one too many times. And we went right down to about a negative, I think 3.5. Mean 1, 2, 3, a negative 3.5 V score. Notice that was the low. Oh, what is this thing right here? That was the pandemic sell-off, gang. So when folks ask me, Rog, are we trading and moving like the pandemic? And we fast forward to now. Ooh, that's not what I wanted to do. Let's try that again. There we go. My answer is no. We haven't even broken the mean. Remember, Powell hiking in Q4 and sending the markets tumbling in Q1 of 2019. So Q4 2018, tumble in Q1 2019, 2020 pandemic sell-off. All of those were happening well below the mean. We haven't even broken the mean yet. So if we're going to say this is 2019, this is 2020, and 2019, that was a big sell-off, gang. That was a very big sell-off. And you can see that in volume. Do we have something similar? We do not. So what this tells us is, yes, we have lower lows, but is this being accompanied by the same type of volume? No. I hope that makes sense. That's the S&P on the weekly, and you'll see very similar looks on the NAS and on the Dow as well. Thanks for the question, Jack. Love it. Terrific question. I love that you all are thinking about volume. Gang, volume is the way you decode nearly everything in the market. Is it more important than price? No, but price is incomplete. I won't say it's incorrect, but price is incomplete without volume. All right. Tesla. Hey there, John. Tesla. Darvis, minor low. Not a lot of volume helping us out here, is there? But, well, let's go back. Take a peek here. previous time we were down in this area, pull that straight across. See that? We're at a significant level in terms of volume, gang. You can see that right there. So let's keep an eye on that. And then if we can get the minor low in this area around the Darvis, that could be very interesting. So that means this lower low that we saw Friday has a higher low that preceded it. We need a higher low tomorrow. We need to ultimately take out the high of that Friday candle, which is 275.57. That's what I'd keep an eye on personally for the for any kind of bounce. All right. By the way, I can't find Topo Chico, which is my favorite locally, and I like a glass bottle. This rainwater stuff is actually pretty good. Been drinking that one a lot. It's tasty. All right. Next up is Mo. Okay, so Altria, long-term. Oh, beyond 5. So before it makes the team, and at a 5-year contract, it's football season, right? If I'm going to sign Mo to a 5-year contract, Mo's got to make the team. Mo's got to have a pretty good season, right? I've got to have a good reason to put Mo on the roster. And generally, it is a high dividend yielding stock. However, if I'm looking at the 5-year, first of all, I'm going to move to a weekly. Second of all, I don't want to be buying a stock in a downtrend, even for the long term. And to get to the 5-year contract, I'm going to keep using that athletic, am I going to sign this athlete to my team? Imagine you're the owner of your favorite football team and you're debating who to make a franchise player. Who are you going to sign to that long-term contract? Who are you going to give those big dollars to? There's got to be a performance. There's got to be a criteria that's met. I don't know that at the moment Mo would meet that for me. Now, there's no reason I couldn't even go out to a monthly for that, but I typically will not. Mo, I would have to say I'm interested in, but I'm going to see how they play for a few more games, if you will. All right, just to really beat that analogy into the ground. But that's really what it is. I'm an owner of a football team, and I'm asking myself, does this particular stock make the team? I'd be careful here. There's no rush, right? If I'm open to a 5-year window, what's the rush, right? And that's another thing I tell traders and investors. If you're looking for something longer term, a position trade and investment, which is pretty much the same thing to me. Why be in a rush? Because the hole that you're considering is years, if not longer. So what's a couple weeks gonna, what kind of difference is that gonna make? So interesting. This is one of my favorites. I am Groot. There's a handful of names, aristocrats, dividends. I'm big fans of both. And that alone isn't justification for buying a stock, but it definitely does promote it to the top of my watch list for when there's an opportunity. So good stuff. Good stuff. Hey there, SK. Thank you for everything I do. You know what, SK? My pleasure, and frankly, my job. I really look at it. I don't know how else to be. This is my chosen career. I'm lucky enough to have folks that are just as passionate about the market and becoming the best trader they can be as I am. So I'm very, very lucky. Truly, my pleasure and my job. I'm curious, is there any significance of the color of the Darvis on my lines? Primarily the reason for the difference in color, you'll see the yellow lines here. Primarily the reason for the difference for the color first comes from, well, it's just easier to pair them up. Which belongs to which, just like mating socks. It's just easier to make the same ones together, which I usually don't. Mismatched socks are my jam. So you can see it's easier to just kind of pair them up. All right. That's I guess you can say the first thing. All right. The second thing is, and it's a little bit more inside baseball, but a purple one starts with a minor low or a lower low, and the yellow ones start with a high. Another way to complete with a high. Another way to think about it is generally a yellow box is sort of a bullish box, if you will, and a purple box is sort of a bearish. But really, just the reason for the colors is just so you know which belongs to which, so you can complete the box. Because notice I don't put the sides on the box because irritatingly, they cover the wick of the candle. So the reason we take the sides off the box here on our sort of reimagined Darvis, this doesn't really share that much with the original Darvis, but it certainly is based on my influence of Nicholas Darvis's work. And to me, I love to acknowledge the giants upon whose shoulders I stand. So while this is not Darvis in any sense, really historically, in terms of what Nicholas Darvis's work was, it's my interpretation. It's Simpler's modernization of that concept. And I like paying homage to those traders who put those ideas in my head, and then we kind of grow that idea to apply this market. So that's it. It's just for color. It's just for ease of use, really. Yeah. All right. Hey there, Mr. Walker. Red, yellow flag. Is it sensible to use a slow stochastic to buy oversold calls? In an oversold market, can we buy calls in a yellow trend? Yes. The momentum is almost always inevitably going to be bearish when we're getting down to an oversold level. What's more important is that yellow trend established? Has it been going yellow for some time, at least 2 candles, if not preferably more? It is not unusual to have bearish momentum getting to an oversold support level. In fact, I would say that's the most common scenario, Mr. Walker. That's the most common scenario. All right, next up, let's see. KMB, long term, no. Oh, long term as in a week? No, not yet. Maybe closer to 110. I mean, look at that candle. I'm not going to step out in front of that. Yeah, that's just a no. That's an easier no. No for now, right? No for now. Neutral market. I need a better, more respected. I need to see a minor low at one of these Darvis levels. So no for now, but definitely neutral. So it is possible. It is possible. All right, Jen, I understand shortening the time frame with day trading, but what about longer term positions? Yeah, what about some of the longer term? Sure. Let's take a look at, for example, let's start with the broader averages. And we're going to do on the weekly, right? Would I be interested in a QQQ position? Now that it's gone double red, I cannot. SPY is still a maybe. DIA, still a maybe. XLF, still a maybe. These are all potentially symbols that we could think about on the weekly. XLV, absolutely still a maybe. XLK is still neutral, right? XLK is still neutral, and it's still in the zone where I'd be building a position. And until I've lost, and since you're asked this question, Jan, you know what our tolerance is. So unless I'm down and I have to boot this symbol off my roster, this one's still in the zone. So XLK, XLF, XLB, XLV, most of these are still neutral enough where the individual sectors haven't gone as bearish as the broader indices have. What about things like XLY? Still a yes. What about getting away from the indices and looking at things like XLE? XLE is an absolute yes. I would love to see a minor low complete here. I was thinking about a 69 or 70 level entry, but we will definitely be keeping an eye on XLE on Tuesday as we go into the mastery, looking at longer term weekly charts. What about XLB, right? Do I like XLB? Again, this is still within what we're allowed to see this market move against us. Would I prefer to see price hold the 200 in the Darvis? Absolutely. Has this exceeded the allowable limit where I'm going to cut this player off the team? It has not. But 2 players I want to add to the team, XLE would probably be really near the top of the list, and XLF is going to be on the list as well. So keep an eye on those 2. We will most definitely be talking about both, and I'm just going to make sure that, are they both on my list? Yes, they are both on the list, E and F. All right, so thank you for the question. I love all the longer term stuff. I love, what that tells me is that, yeah, the daily is selling off. Many of you are day trading with me 5 days a week in the mastery, also in the futures room. And many of you are saying, Rog, I'm going to keep my head up. I'm going to scan the landscape for opportunity. I'm going to continue to look for where there's something shaping up, even on that longer term time horizon. So I love it. Love, love, love it. That's the way that in any circumstance, gang, uptrends, downtrends, anything, where is the opportunity, right? Because again, I've said it a few times. This is probably as good a place as any to end the show. I've met a lot of traders who do far better. I mean, far better than I do. A lot of them have funds and lots of money under assets under management, and some of them just are further along in their trading journey than I am. There's always going to be somebody we can learn from. I'll tell you this, even as a young trader, the traders that I had as mentors and that I studied, none of them are pessimists. None of them are fear mongers. All of them are saying there's opportunity in this market somewhere, and I'm going to do my homework and position myself as best I can. They're always ridiculously optimistic. That doesn't mean they're always bullish. I don't know why bullish and optimism have somehow become synonymous. They're not. They're always optimistic about their ability to find an opportunity. They were always opportunistic and positive. And so that's what I love with what I'm seeing here, gang. I'm so grateful that that's the attitude you have, because that's who I want to surround myself with. What's the opportunity? Not the sky is falling and the markets are tumbling and complaining. This isn't fun. Believe me. I know what our investments are looking like, but there is opportunity. And I think it also depends on, where you are in your investing journey. To my mom, she's not enjoying this. She's 70, whatever she is. This is not the kind of movement. Then again, the way that I put her in the market, she doesn't have a lot of exposure, certainly not from the highs, and she doesn't have a lot of exposure to equities as she might have had 15 or 20 years ago, right? I still have a lot of exposure to equities, because when I map out my journey eventually to retirement or wanting to access that money, I'm still, plenty of years out, at least 10. And I know that if I look at any 10-year segment going back to World War II, at worst, at the end of that decade, go back and look at that. Just don't take my word for it. Look at a monthly, bring in as much data as you can, and look back at any 10-year segment. And really the worst scenario is you're flat after 10 years, right? That's, I think, one 10-year block. You'll see that the rest of the time, the markets move higher. That's what they do given the time. And that's why Buffett says, look, if you had to start all over again, what would you do? I think Grandpa Buffett says all the time, I'd buy the S&P 500, right? And that's the same attitude that I have. So hope that makes sense. Thank you for keeping your heads up. Thank you for looking at the opportunity. I'll see you tomorrow in Charts and Coffee, 9 a.m., right back here at the Simpler Trading YouTube channel, gang. Be good to each other. Thank you for the questions. Great stuff.